Hi, welcome back to my channel, My Tax Guy, where we discuss all things tax and business to help you better maximize your tax refund and to take away some of that difficulty that people have when addressing certain tax matters, and hopefully this channel can help you out. The most important thing I want to say before I jump into my topic is thank you to everyone who has liked, shared, and subscribed over this last couple of weeks. I want to let you know I appreciate all of the feedback that I'm getting and that it's really helping me grow immensely. And that's the name of the game for this channel, is to really grow and to just help each other go forward and have like the best life possible. And with your help, I can continue to do so. Now, I do want to make it to 1,000 subscribers. So please just keep continuing to hit like and share. I really appreciate it. I really want to get there, and I can only get there with your help. Now, without any further interruption, our tax topic for the day: the Earned Income Tax Credit. Now, one of the things about the Earned Income Tax Credit that a lot of people who don't know is that it was really created to help people get back to going to work. It was really there to incentivize people to start taking advantage of the workforce and to get out there and start taking on jobs with the hopes that they were able to not just move up in income, but to actually move up in like social standings and things like that. So it really was there created to help people get ahead and do things like buy homes, buy cars, and things like that. That was its initial purpose. Now, I know there are some people out there who try to like take advantage of the system, and we're really not going to get into that part as far as like any sort of like scamming and things like that. But trust me, I know they're out there. We know they exist. But this is for the people who want to do the right thing and do it the right way. So I'm just going to address those people, and hopefully I can help you guys out. Trust me, those people are not getting away with anything, because the IRS will tell you better than anyone. Every dog has their day. And trust me, their day will come. Now, one of the other things I want to discuss real quick about the Earned Income Tax Credit is that what the heck is earned income? Well, simply put, it's income earned from you going to work. And that can be any kind of work. Paperboy. You could be contractor work. I discussed before with like Uber and DoorDash, things like that. You can even do other like basic work like babysitting, gardening. Anything where you're going out to earn income is basically the type of income that will allow you to earn Earned Income Tax Credit. Another thing that is about Earned Income Tax Credit is that there are some limitations on there as well, especially for people who do not have children. Yes, even those who do not have children would still qualify for Earned Income Tax Credit as long as they're below $15,800. As long as they're below that threshold, you do qualify for Earned Income Tax Credit as long as the income is earned and you're above a certain age. One of the things that a lot of like this with this past year with the American Rescue Plan, which is Joe Biden's tax plan for 2021 into 2022, one of those things that he created was the fact that there were increases to the standard deduction, which is basically what everybody gets when they fall at a certain status. Now, he gave you an increase there. He also increased the amount of the Earned Income Tax Credit, which he's going to be taking away come next year. So when 2022 starts, everyone else that gets Earned Income Credit will see an increase about $200 to $250 as for their filing status, except for the people who have no children. So if you have no kids and you're single and no dependents, you're going to see a dramatic decrease in your Earned Income Tax Credit. It was $1,560 this year. It's going to drop all the way down to about $500. So you're going to lose a good chunk, about 2/3 of what you had for 2021. You will get about 2/3 of that in 2020, about 1/3 of that in 2022. I'm sorry. So you're going to see a big decrease, but have no fear, because hopefully you're working towards getting out of that tax bracket. Because again, the Earned Income Credit is supposed to incentivize you to keep taking on work, to take on more work, and to work your way up in whatever organization you're in, so that you're getting the most out of the process. Now, another thing about earned income credit, a lot of people seem to think that their situation doesn't matter as far as what's going on in your home, and it absolutely does. There's a sliding scale. You can have 1 to 3 dependents. If you have more than 3 dependents, your earned income credit amounts do not change. So 3 is actually the maximum. Once you hit 3, you can have 7, you can have 8, but you will still get the same amount of earned income tax credit. Now, I will also say this, even though this is kind of a topic, is that the child tax credit does not work the way earned income credit does. So you need to make sure that you're claiming all of your children, all of them. As long as they live in your house and you're responsible for taking care of them, they should be in your tax return. It's really important that you safeguard your kids' Social Security numbers and not do anything that could jeopardize that. Social Security numbers are a really big thing out there, date of births, and those are the sort of things that when you give them away, you kind of put your kid behind the 8 ball, because you're trusting someone else for some money and you're giving away your kids, kind of giving away your kids' future. So it's just best, just claim all your children on your own. Trust me, there is a benefit in there for you. Even if you don't see it right away, it is there. Another thing you need to understand about the earned income credit is that it does not stop at age 18, okay? Not for everyone. For some people it does, but as long as your child is a full-time student and under the age of 24, your child you can still qualify for earned income tax credit for that child. That's right. Now, once they hit that magical age of 24, in the year that they turn 24, that will no longer apply. So if your child turned 24 this year in 2022, and you go to file your taxes, basically your tax preparer software will let them know, hey, this kid is 24, no more earned income credit for this child, even if they are a full-time student. It's a threshold that gets cut off. Another threshold that you have to be aware of, and which is really important, because I see a lot of people trading on the stock market with crypto and shares ballooning out of control. I know a lot of people made a killing the prior year with the AMC fiasco. And so you have to understand, last year there was a bump. The threshold was $10,000 of investment income. That threshold is gone. It is back down to $4,000. So if you have more than $4,000 in investment income, I'm going to just tell you right now, you are not going to qualify for it. So you have to keep that also in mind. But again, the benefit has to outweigh what's happening. You just have to be aware that this is what's going to happen. There's not much your preparer can do over what you do over the course of the year if you're not aware of it. So that's why part of the reason why this channel exists is to get you guys in thinking of this stuff throughout the year, because as a preparer, we also think about this throughout the year. Another thing that you guys have to be aware of is things like split custody. Now, I know a lot of people feel like split custody is just one of those things where, hey, my kid's with the pop maybe at the first beginning of the year, maybe 3 months, and then the rest of the year they're with me. Make sure you guys have an arrangement in place. There's a form that you guys get to fill in. If you want to make an agreement as far as who's going to claim who, I think it's the form 8332 that you will mail off to the IRS before the tax year starts, so that there's a clear understanding of who's going to be claiming the child. Again, it should be your child. It should not be anyone else that you're passing off your child's birthday and social security number to, because those things get checked. Part of the things that changed when Obama came into office is that he changed the way that earned income tax credit actually is accounted for when you file your taxes. There is a delay. Everyone else who doesn't really qualify for earned income credit, when they file on the 31st, they'll more than likely get their refunds probably second, third week of February. But it's different for a lot of the people who claim an earned income tax credit and child tax credit and child care credit. When you claim those credits, you are automatically entered into what I like to call sweepstakes, to be out of the check-in. Now, during that check-in, they check every birth date, every social for that person on your tax return. your birthday, date of birth and social, and every dependent. It's not one of those things you can avoid. It is 100% mandatory that this gets done, and there's usually a 2 to 3 week hold, usually around February 15th, when they actually start processing your tax return after they finish checking all that information. So normally your tax preparer should tell you or will tell you, hey, when we send this off, it's not going to be an automatic like before, and maybe like 2011 where you would just get your 3 weeks. And probably around Valentine's Day, you're like, yeah, I have my money. That no longer happens. Around Valentine's Day, when they're actually going to start going, okay, we've checked all of the vital information. Everyone matches. We're good to go. Now, some people will get a letter in the mail, and they will have to be able to verify that this person is, in fact, the person that has lived in their home, that they're related to, and that they're under their care. Those are your big 3 tests when it comes to your dependents. So you have to prove your relationship as well. And one other thing, but that's not the biggest thing. The most important thing you have to realize is that you have to prove that that person is your dependent, you're caring for them, that you're supporting the household, that you're the person in charge of running everything that's going to go on with the home. There's no 2 ways about it. And if you can't have supporting documentation for those things, then more than likely they will disallow the credit. And then what you'll end up having to do the following year, if they disallow the credit, is that then you're going to have to fill out the 8662, which is the form that you get when you get disallowed for earned income tax credit. Typically it's like 1 or 2 years, but it could be more depending on the severity of with the transgression. There are some people I've heard they've had to fill that thing out for 5 years. So you just want to make sure that, again, all your children are on your tax return. Lastly, and probably the most important thing that you have to keep into your mind is that these are programs that have threshold amounts. There's a phase out and it is a sliding scale. It is very important that you realize that no 2 people's tax situation is exactly the same. Yes, I know there's probably somebody at your job who makes the kind of money that you make, but you don't know everything that's going on in their home. So it's really bad to compare the 2 to see, well, why is this person getting this and this person is getting that? Because unless they're going to sit down with you and explain everything that's going on in their personal life, there's no way that your return is going to look exactly like theirs. However, I will also say this. If you guys are close in income and close in certain things like age of children and things like that, it might be a good barometer to see what you should be getting as far as a refund. But in no way would you be getting the exact same amount as someone else. One of the things we learned with the child tax credit, with this last of running with Joe Biden's tax law, is that ages matter. They do. So let's say I have a 17-year-old in my house and I have a 12-year-old. Now I still qualify for my earned income tax credit for my 2 dependents, but I'm going to lose the child tax credit for the 17-year-old because the last year of eligibility for a child tax credit is 16. So my refund is probably not going to look like my friend who has an 8-year-old and a 9-year-old. It's not going to look the same. So those are the things you have to keep in mind, which is why I say it's not always the best to say, hey, I don't know why my friend did this, my friend did that. It's always best to discuss it with your tax preparer. They will go over these things with you and they will walk you through the entire process. Now, I want to thank everybody once again for coming in. Hopefully this helped you a little bit as far as understanding how earned income tax credit works. If you have any questions, feel free to email me at my tax guy. There's a lot of other things inside of the earned income tax credit that I will be happy to go over with anyone. So shoot your questions to me, mytaxguy22@gmail.com. Once again, I want to thank everyone and you have a good night.